All right, what is up, family? So we got the high probability options trading course taking place right now in the Focus Trades group, and I want to give those of you here on YouTube a little bit of insight into some of the concepts and strategies that we're covering in the course. So my favorite high probability options trading strategy is known as a credit spread, where you're selling out the money options. So this is a trade that I have on right now that I took yesterday. And typically, guys, if we think the market is going to move higher, as a general statement, most people are going to buy calls. The higher probability, lower stress alternative in that case is selling puts. So what I did yesterday was here on the SPX, I sold puts down here at $29.45 for next Friday's expiration. And now I'm going to make $1,000, right? I got $1,000 paycheck coming my way by next Friday, no matter what the market does moving forward, as long as we don't close below $29.45. End of story, right? I'm gonna make $1,000 if we don't close below $29.45. So the market can move higher. The market can move higher a lot. It can go sideways. It can fade a little bit. Doesn't really matter to me. As long as we close at anywhere above $29.45 by next Friday, I'm making $1,000. And here's how that looks, right? What I did here, guys, for this put spread was I sold 7 of the $29.45 puts, and as protection, I bought 7 of the $29.35 puts. Now, if we close anywhere above $29.45, both of those puts are going to expire out the money. And as you guys know, and like a lot of us learned the hard way, options that expire out the money expire worthless. So if we close anywhere above $29.45, here's how I'm going to make my $1,000. Those 7 puts that I shorted at $9.54, well, they're going to zero, and I'm going to make $6,600 in premium, right? I'll make $6,600 in profit. Now, those $29.35s I bought as protection, they're going to zero as well. I'll eat the $5,600 loss there, and the difference between the two, the $1,000 and change, is going to be my profit. So here's what makes this, guys, high probability. If you think the market is going to move higher and you buy a call, like most people will do, the only way you're making money now is if you're right. You buy a call here yesterday, the only way you're making any money is if the market moves in your favor. So when you buy a call, there's only one move that stock of the market can make that's going to result in you making a profit. And that's a move to the upside. Now, to make matters worse, when you buy an option, when things go against you, not in a big fashion, but when the stock simply doesn't cooperate, those options can take a lot of damage. So when you buy an option, there's one move that's going to result in you making money. But in the case of the trade I took here, guys, I'm selling puts down here at $29.45. That means I'm making that full $1,000 if the market goes up a lot, if the market goes up a little bit, if the market goes sideways, if the market goes down a little bit, and even if the market here over the next 4 or 5 days goes down a lot. But as long as we don't close below $29.45, both of those options are going to expire worthless, and I'm going to collect $1,000 of profit. That's what makes that high probability. The success of this trade is no longer, dictated by whether or not I'm right. And any little fades and dips and all that crap that can typically knock you out of your options positions aren't going to matter to me at all. So I can set this trade, go focus on other opportunities, and not even have to sit here and watch it. Now, these options expire next Friday, guys. It's Thursday night as I'm recording this. I put this position on Wednesday morning. And you can see that the market didn't necessarily explode today, right? A very kind of modest move to the upside. So if you had bought in calls, they're working in your favor, but not by that much, right? But because I sold those out the money puts, and because today is another day where those options are still out the money, and expiration is starting to quickly be right around the corner, all that's happening down there to those puts is that they're rapidly losing value. So the market didn't necessarily go in my direction all that much today, but those puts that I sold yesterday, guys, when they were worth $9.54, as of right now, they're worth less than $5. So didn't necessarily do what I thought it was going to do, right? If I bought calls yesterday, I'm relying on the market moving higher. Now, that didn't really take place today, but because I'm taking that higher probability route of selling those lottery call out the money options, they're just losing value with every hour and every day that passes, as long as they remain out the money and expiration's coming up. So I'm already 40% of the way there to my max profit. one day into this trade. So this is an example, guys, of a credit spread. It's a high probability options trading strategy, and it's the core of the trading that I do. So if you're interested in learning more about high probability strategies like this, like I mentioned, we're doing that course right now in the Focus Trades group. You guys can come on and join us. We're beginning to roll out the content for this course. And I'll put a link here in the description of this video for a free 10-day trial to the group. You'll get access to this course, guys, the private chat room, the 2 morning live streams, and all the other goodies that come with the $10 a month Focus Trades group. And also, for those of you in New York, if you're interested, come and hang out with me November 16th and 17th for the 2 live day class. But that's it, guys. That is the put spread on the SPX that I put on here this week. And as long as the market doesn't completely turn around and roll over and just give out its current trend and break below the 50 MA and break back below a really important level of support, I got $1,000 coming my way. And I sleep a lot better knowing that I'm going to make that $1,000 regardless if we go up, down, sideways versus buying a call, where the only way I'm going to make money is if that thing does exactly what I think it's going to do. I'll catch you guys in the next video.